Today, I want to dive into the latest updates on SoFi Technologies and how various factors impacted its stock price. There's a lot to unpack, so if you're invested in SoFi or simply interested in the broader market, stay tuned for a detailed analysis. Hello, everyone. Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads and also enter our giveaway. But before that, alert this is not a financial advice video. SoFi closed today with a notable decline of 2.93%, which mirrored the overall trend in the stock market. Most stocks experienced a downturn driven by multiple external factors. SoFi stock dropped to a low of $7.61 during early trading and peaked at $7.90 before consolidating. In terms of trading volume, we saw 34.1 million shares changing hands, slightly below the average daily volume of 41.4 million. A significant portion of this volume was driven by algorithmic trading, as indicated by barcoding patterns and sharp intraday price movements. The activity on the secondary market also reflected a mixed sentiment, with a slight lean towards selling pressure. After-hours trading saw more volatility, where the stock continued its downtrend. During regular trading hours, transactions totaled around 8.72 million shares, with both buying and selling almost equally balanced. This mixed trading pattern is a response to several ongoing economic and geopolitical factors. One major influence today was the rising geopolitical tension in the Middle East, which spooked investors and cast a shadow over the broader market. Additionally, the latest manufacturing data came in at 47.3, slightly above the forecast of 47, but still below the critical 50 threshold, indicating contraction in the manufacturing sector. This, in turn, is fueling concerns over future interest rate hikes by the Federal Reserve. There was also an increase in job openings, reported at 8.04 million compared to an expected 7.6 million. While more job openings might seem positive, it could also imply that people are not taking these jobs, adding to worries about the state of the labor market. Speaking of the Federal Reserve, Chairman Jerome Powell emphasized that the labor market is now a primary focus for the Fed, even more so than GDP growth. This suggests that any negative developments in employment numbers could further push the Fed to adjust its monetary policy. For SoFi, all these developments created a perfect storm of uncertainty, driving the stock price lower. Historically, SoFi stock tends to experience an upward trend between the announcement and the actual earnings report. On average, the stock has gained around 13% during this period in the last 2 quarters. However, given the current market conditions and elevated fears, it remains uncertain whether this pattern will hold. Now let's talk about short interest in SoFi. Short sellers returned 145,000 shares today, indicating that they were relatively inactive despite the stock's downward movement. This suggests that shorts do not perceive today's price action as a sustainable move lower. There are currently over 10 million shares available for shorting, which indicates plenty of room for additional short positions if they anticipate further declines. The cost to borrow SoFi shares remains very low, averaging 0.78%. Interestingly, the cost to borrow minimum even dipped into negative territory at -0.2%. While this is a minor negative value, it highlights the presence of potential manipulation by some market participants who are attempting to drive short interest. Currently, 17.49% of SoFi's free float, equivalent to 182.94 million shares, is being shorted. This level of short interest is substantial and could lead to heightened volatility in the coming days, especially as we approach the Q3 earnings report. Looking ahead, the broader market will closely watch Friday's unemployment data, which could significantly impact investor sentiment. President Biden's recent comments on defending Israel add another layer of geopolitical risk, which could escalate tensions and drive further market turbulence. A similar situation occurred about 4 to 5 months ago, but de-escalated quickly. This time, however, the potential for a more significant conflict is higher, which could have far-reaching implications for the global economy. Regarding options activity, SoFi's options market reflected a bearish sentiment today, with 4.59 million in call options traded against 2.03 million in puts. Around 49% of all options traded were bearish, indicating a cautious outlook from traders. The consensus for call options suggests a target range of 8 to 850, while for puts it's around 750 or lower. While these positions reflect market sentiment, it's important to remember that options do not directly move the stock price, they only indicate expectations. On a personal note, I engaged in some options trading myself. I sold some $8 calls, similar to what I did last week. While the profits might not be huge, every bit counts. If you've engaged in any option strategies, whether buying or selling, feel free to share your experience in the comments below. And for those who are new to options, I highly recommend learning about them. They can be highly profitable when used correctly. As for the technical levels, SoFi closed at $7.63, which places it between key support and resistance levels. Moving forward, 7.55 cents is the next strong support to watch, as it wasn't tested today. The next resistance level is at $7.68. With economic data releases coming up, these levels could be challenged, and any breach could set the tone for the next leg up or down. Tomorrow's employment data will be a critical indicator, along with initial jobless claims on Thursday and payroll data on Friday. The forecasted unemployment rate is 4.2%, and any deviation from this could trigger significant moves in the stock market. On a broader level, SoFi's technical indicators show that the stock is holding up relatively well compared to other growth stocks, which are breaking down on technical levels. SoFi's consolidation since mid-September suggests underlying strength. However, retail investors have been selling off their positions, and institutional buyers are not stepping in aggressively to buy the dip. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.